NIO is preparing to become a $1 trillion asset. NIO stock secret document exposed. The stock market percentages are down every day for the company, but is it still making profits? How might that even be possible? Is there any secret that NIO has acquired? Let us know everything about it. Hola friends, and welcome back to Stock Market News. So today, we are back again with some interesting and spicy news. We have got some secret documents from NIO about how the company is trying to become a $1 trillion asset. Though it is known to the whole world, NIO is facing problems from different areas. JAC Motors and Hefei makes NIO cars. JAC makes sedans, hatchbacks, and pickup trucks. Think of NIO as JAC's high-end electric brand. NIO says that it wants to be the Tesla of China, but judging by the number of cars sold, it's not China's Tesla. When you read that it will make a model that is competitive with the Tesla Model 3, you should know that it will only make a few of them. In the first 3 months of 2022, Tesla sold more than 300,000 cars. If you want to know what it means for NIO to be globally competitive, look at Norway, which is the most competitive market for electric cars in Europe. NIO has entered this market and wants to sell 7,000 cars in the next 2 years. Infrastructure, especially battery swaps, will be key to making this happen. NIO has been a leader in this area in its home market. The idea is that when a battery's range goes down, it can be replaced quickly and the whole car can be serviced. The argument is that if NIO can make it in Norway, it can make it in the US, but they will have a lot of competition, even in China. Geely, which now owns Volvo and has an electric luxury brand called Polestar that is taking orders in the US, sells as many cars in China as Tesla does in the whole world. This is only the first problem that NIO is now facing. Recent studies have shown that the overall production of the company has also decreased due to COVID-19. Reports have shown that China has put a lockdown again in some vital areas. Now, it is planning to put a lockdown in the capital city, Beijing, as well. It has severely affected the production of the company. Less than half the population were working in the company, which made the overall working quite difficult. NIO executives said that between 23,500 and 25,500 cars will be delivered in the fourth quarter. This is about the same as the record of 24,439 cars sold in the third quarter, which the Chinese electric car company reported on Tuesday. In a statement on Tuesday, CEO William Bin Li talked about continued supply chain volatility and said that fourth quarter sales would be between $1.45 billion and $1.57 billion, which is a much lower range than the average analyst estimate of $1.69 billion. NIO reported a loss of $440.6 million, or 28 cents per American depository share, for the third quarter. This is more than the 15 cents per share loss from the same time last year, which was caused by a large buyback of shares from a minority investor. When this charge and stock-based compensation were taken out, the loss dropped to $88.4 million, or 6 cents per ADS. From $692 million a year ago, sales went up to $1.53 billion. FactSet says that analysts expected an adjusted loss of 7 cents per share and sales of $1.44 billion. During the extended session, NIO stock dropped 2.3%. The session ended when the company's conference call started. Now the supply chain issues have recovered slightly, the company said, and the Hefei production base is gradually resuming production. It noted that the future production plans still depend on the recovery of its supply chain. Mainland China's worst COVID outbreak in the last several weeks has prompted travel restrictions and lockdowns from the eastern metropolis of Shanghai to the northern province of Jilin, where the capital, Xinjiang, is home to auto factories. Now, the company says that the problems with the supply chain are getting better, and the Hefei production base is slowly getting back to work. It said that the plans for future production still depend on getting its supply chain back in order. At this stage in the game, purchasing shares of NIO is equivalent to purchasing shares of the Chinese government. Your investment is in good shape if you purchase NIO shares around the time that China was making arrangements for its rescue 2 years ago. This share price reached an all-time low in March 2020, hovering close to $3 per share. On May 9th, it went on sale for close to $14. If you entered the market late in the year 2020, during the period that the government was cracking down on technology, you were losing money. At the beginning of 2021, share prices reached an all-time high of more than $61 apiece. Nevertheless, in contrast to the majority of Chinese stock offerings that are traded on U.S. exchanges in Hong Kong, NIO will not be raising additional capital or issuing new shares as part of this listing. Instead, the business will be listing by way of introduction, which implies that a portion of its already existing shares will be made available for trade in Hong Kong. According to a file that was made with the Hong Kong Stock Exchange, NIO intends to begin offering these shares for trade under the symbol 9866 beginning the following Thursday. The exchange was published in the Hong Kong stock market. The Chinese startup company stated they had also applied for a listing on the main board of the Singapore Stock Exchange as a means of introduction. The firm that manufactures electric vehicles has stated that it does not have any plans to make the shares that are listed in Singapore and Hong Kong exchangeable. It is becoming more likely that Chinese companies will be delisted from exchanges in New York because Washington wants to limit the exposure of American investors to companies that do not comply with audit checks conducted in the United States. Because the possibility that confidential information could be disclosed, Beijing has been reluctant to permit such foreign inspection of local enterprises. NIO is working on getting its share listed on the Singapore Stock Exchange. Following the initial public offering that took place in New York and the secondary listing that took place in Hong Kong, this would be the Chinese electric car maker's third listing site. NIO, a Chinese manufacturer of electric vehicles, announced on Friday its intention to seek a secondary share listing in Singapore. In March, NIO completed a secondary listing on the Hong Kong Stock Exchange in addition to its primary listing on the New York Stock Exchange. NIO shares are expected to begin trading on the Singapore Exchange sometime in the near future. To conclude, we can say that even if the company is facing numerous problems, it is a safe place for investments. Steps taken by the company in recent years and all calculations made even outside the company are in its favor. It is going to grow tremendously in a few years. No doubt EVs are now our future. Now, Tesla and some other American companies have formed a monopoly to produce EV cars. But this monopoly is soon going to break down. Even if the US delisted NIO, it will enroll itself in the Singapore exchange market, making a third way. Another milestone is that the company has planned to build EV cars for middle-class people, but features of the car would resemble Tesla. So, the company's going to build a cheap Tesla. The thought is enough to bring revolution in the field of automobiles. The recent developments have given a positive vibe. These are a few reasons that, despite bad stock results, make NIO an incredibly good option for investment. This exchange is at the bottom for now, and it may grow to reach a certain height soon. So investing in it might bring good fortune. So, this was all for this video. If you have any suggestions or queries in your mind, feel free to pin them down in the comment box. And if you like the video, don't forget to like and share. If you want to watch more videos like this, please subscribe to my channel and hit the bell icon to get the latest information on upcoming videos. Thanks for watching!